G'day there, Wealth Press subscribers, viewers, traders, and investors. It's time for the weekly market wrap. And today my guest is Jeff Yastine. Jeff, welcome.
Hey, glad to be here.
So Jeff, let's see, this is the second week of 2021, and the smoke is starting to clear from all of the geopolitical upheaval, so to speak. Coronavirus is reaching unprecedented levels of infection. Central banks are printing unprecedented quantities of cash. I saw an interesting TikTok video where the guy said, "I'm just sick and tired of every day being a historical event. Can we just have some normalcy?" How's the market treating you and your subscribers at this point?
Yeah, the market is treating us very well, perhaps too well, in a sense that, when things start looking so easy, and it seems like no matter what you bet on, it just goes up, and it doesn't go up just a percentage point or two, and in a handful of days it goes 5%, 10%, 20%, 30%. Obviously I become extremely suspicious and think, well, I'm probably not that much of a genius at this sort of thing. So the risks are rising. That's what I've been saying to myself and everybody who follows me. And I think on our Monday roundtable talk with everybody else, I said basically, it's a melt up until proven otherwise. And I continue to believe that. And we may yet see corrections, sharp ones. We might even be starting one today. We had Biden unveil his, I think $1.8 trillion stimulus plan. And of course, it'll take time for that to work its way through the Congress once everything gets into gear for the U.S. government here after the inauguration. So we don't know what it's going to look like at the end result. But we're seeing selling today on a Friday, and it brings to mind the idea of buy the rumor, sell the news. And so it's quite possible we could see some profit taking in coming days. I'm not saying it's the top, but I'm just saying that we could see an extreme move to the downside and see an equally large move back up to new highs again. And that's sort of the key for these kinds of melt ups, or call it a bubble. I like melt up just because it's the idea that a bubble basically presumes that there's an end, and there is going to be an end to this. But it seems like there's an immediate end when you say bubble, as where melt up can keep going. And the thing I try to remind people from time to time here, and I'll do it here as well, is that in a true bubble, or again, a melt up, we saw it in 2000, we've seen it a few other times, it can go on for a long time. And so with intermediate corrections, and 2000 is a good example where we saw the market in the very beginning of 2000 open at an all-time high, had I think about a 15% correction for the NASDAQ. Another move, this is all in the month of January 2000, another move to all-time highs, another sharp 10% correction or so, and then another 40% move from basically the end of January, early February, up through the middle of March. So that's the thing. This could go on for a while. And so the idea is trade smaller, let the volatility work for you, and keep in mind the overall risk of your portfolio. But thus far, it's treated us well if you just take these things in stride and not get too excited on the downside days, like today may be one of those, and just sort of let your positions ride and take judicious profits along the way.
Sure. Do you think there's a sort of broad-based capital flight from markets generally as we approach the January 20th inauguration due to the uncertainty inherent in the risk of violent protest?
In a more normal market, and I know the markets are never really normal, right? Everything's different. This market is as abnormal as it could ever be. Because we have this pandemic and terrible things going on, and yet the market is probing all-time highs here. So I would say no. I don't really expect. Well, I take that back. I wouldn't be surprised to see a general flight out of the indexes moving towards the inauguration day. And depending on how steep it is, that's the hard part. But is it like did we just hit the top, and everything's downhill from there? I would say no. And chances are, if we do decline a bit here between now and Inauguration Day, that the day after that, it's going to be like, hey, all hands on deck, let's run this thing even higher, because now, you got the Democrats in charge of both houses of Congress, and you got Joe Biden as president, and just, let's say, general optimism of a new administration, and perhaps government becomes boring again. And that alone may be enough to propel the markets even higher.
Mm-hmm. Okay, so then it sounds like it's kind of getting to the point where we should be considering some defensive positions and being less aggressive with our risk on positions. Is that something that you are sort of heading towards then?
Yeah, well, yes and no. I don't there definitely are risk on and risk off parts of the market. But for the kind of trading I do and the kind, that people follow me for, it's not so much about yesterday was risk off, and today the S&P futures were up X amount, so it's risk on, and we do this, and this. My methods are more simpler than that. And what I encourage is sort of like looking for stocks that have high value but are underpriced or not appreciated as well by the markets, and basically just trying to keep cycling into those and riding those for as long as we can, and in the meantime take judicious profits along the way. I'll give an example. All right, they make drones. Okay, they're based in China, so they weren't on the delisting list that the Trump administration was talking about, but it's a Chinese stock. And back in last fall and like October, when I started talking about this stock, it was like $8, $9, and it had been public for about a year. And I said, hey, this is an interesting drone manufacturer. They're making air passenger taxis that have actually been looked at by like the Canadian authorities. They're starting to fly in China in limited ways. And this is like drones for people to ride around on. It's a real thing. They even demoed it to the governor of North Carolina back again many, many months ago. And that stock, since I started talking about it, it's up about 400%. Now, they don't all turn out like that, but it's the idea of like looking for these stocks that you're not going to buy at all-time highs now. Instead, look for them in that sort of part of the chart where they're relatively flat and they start popping higher for a few days. You see lots of volume. That's the point to start riding these things. And you know what? If the next day the market falls apart and everything goes to heck, well, your downside on that might be 10% before you decide to get out, because the trend has been broken, as opposed to buying a lot of these other ones that are up 30, 40%, 50, 100%. And it's sort of like, well, do I ride it down 25% before I get out, or do I write it down 50% before I get out? And an experienced trader knows how to handle that, the kind of volatility. You buy less for these stocks that are already sharply higher, so that your downside volatility isn't there. But my point is that if you just look for stocks that have lots of value and are sort of undiscovered, that's a way you can make all this work for you without, in my view, incurring quite as much risk as trying to focus on risk on and risk off, and always sort of being a step behind, if that makes sense.
That does, Jeff. That's great. Okay, Jeff, we're going to leave it there for now. We're going to come back to you at the round table next week. Thanks very much for joining us today. We'll talk to you soon. Have a great weekend.